Beforepay shares crash after listing. Let's have a look. Hello everyone, Florian.heise here, and grab your Steiner coffee because we're going to talk about the Beforepay share crash just after their listing. Now, I'm not familiar with this company. All I know about them is the terrible advertisements I've seen appearing all over YouTube. I just thought, okay, another Afterpay clone. Now, I know many viewers successfully invested in the Afterpay IPO and rode it to the moon. And I'm really hoping some of you managed to sell when it was over $100. You know, I think, yeah, 151. I'm just looking at the chart right now, guys. $151. This is the Afterpay journey. You know, just boom, rocketed to the moon. And now it's sitting down at $67. Still awesome. In the past 5 years, you're up over 2,000%. So if you sat on it for, 5 years, you're doing really well. But if you got in at the high, or you got in, any time, pretty much, since 2022 in October, you're not, you've been on a crazy ride. Now, I'm not the biggest fan of these type of companies, guys. You know how some people are, unhappy that their superannuation is invested in coal mines or natural resource companies. I don't mind that. I'll happily buy my AGL shares. I'll happily buy my Fortescue Metals shares. I'll happily buy natural resources that actually produce things. But these type of buy now, pay later companies, they give me the heebie-jeebies. I mean, I'm not going to make any judgment calls or be critical of anyone who's buying into it. But I don't know. I don't blame you for jumping on this one if you're on the IPO because you thought it was going to be another Afterpay. You thought it was going to be another success story. I understand. But, yeah, it's not really something I agree with wholeheartedly because this is just encouraging Sure, there are some people that take advantage of these systems and use it. And I guess it's better than credit cards in some regards, but this is having a financial impact on people, these buy now, pay later things or pay advance things. In some ways, it's digital loan sharks in a regard, just a bit hipper and trendier. But anyway, let's have a look at this article from news.com discussing it. Pay-on-demand lender Beforepay sees a massive price dive on the ASX debut. It shaved almost $70 million off the company's valuation as consumer advocates warned younger generations are vulnerable to falling into debt. Is it just younger generations, everyone? I think it's everyone, to be honest. I know older people who get suckered in with falling into debt for these solar panel schemes. The panel will pay for itself and then you're stuck with this debt. So it's not just younger ones, but perhaps, here's the question. Is using this better than a credit card? Because in my younger days, I had a credit card. I'd go out, I'd get cash advances, we'd be drinking. You waste money. Easy access to money. If I think back about it now, I'm quite angry at some of the stupid decisions I made. But that's part of youth, sadly. Is this going to be any worse, or is this going to be better than that for other generations? So, Beforepay, a fintech that gives people an advance on their salary before payday, has suffered a horror entry to the Australian Stock Exchange after its shares plunged by 44% from its original price offer. 44%. You should have bought in the Coinbase listing. I'm still in the red on my Coinbase one. I think it went up further, some of the shares there, and yeah, it's still down. Not a fan. Anyway, doesn't matter. That's a good loss there. I'll just store away for when I need to sell it to offset some gains. That's how you got to think about these things. The company's share price plummeted from $3.10 to $1.90. Beating last year's record for the worst first-day performance on the ASX. The brutal entry saw Beforepay's market value drop from an expected $158 million to $90 million. The fintech, which has around 139,000 users, has tripled its customer base in just 12 months on average. Customers borrow $260 and take 15 days to pay it back. It has dished out $77 million in the last 4 months alone. Services like Beforepay are particularly popular among younger generation, with Finder research showing nearly a quarter of Gen Z Australians have used a pay-on-demand service to access their income. Meanwhile, Beforepay's default rate sits just 3%, after it stopped lending to Centrelink customers in an effort to improve the figures. Okay, after 7% previously failed to make payments on time. There you go. So when they were lending to Centrelink people, they had a 7% default rate. Now it's just 3%. Oh boy, well that shows you. I mean, this is it. This is taking advantage of desperate people. This is what it is. It's taking advantage of the desperate. It's kind of sad. What would you rather own? A company lending money, lending scraps to Centrelink recipients, or a coal mine? What do you think's better for our nation, our civilization, humanity? Cheap electricity, or lending money to the impoverished? Last year, the company, which is chaired by a former Westpac chief executive Brian Heise, raised $35 million from investors in its initial public offering. Chief Executive Jamie Twiss defended Beforepay's performance on the ASX, saying markets go up and down, and that price was set back in November under very different trading conditions. He added that the Aussie company has its eyes on expanding into bigger international markets. The US is probably the market we're most seriously looking at. It's an emerging category in the US, he told the Australian. Everyone wants to get into the US. I remember when we were working for Lorna Jane, they were doing a big push to get into the US market. That was the whole thing. That's kind of, I think that's one of the reasons why we got in there, because they were focusing on the US, and we were given we were working on all their Australian projects, guys, and all the other countries overseas. But I mean, you've got to just think the scale of the US is insane. You develop a product here and sell it here. What do you got? A 25 million population. You do it in the US, you've got millions more. We'd like to see growth that's rapid, but we don't want to be reckless with our investors' funds or the money we're lending to our customers. He added improved technology and data meant that they have increased limits for some of the most creditworthy customers in Australia. We're attracting increased creditworthy and affluent customers who can manage a $200 pay advance the first time rather than $100, he said. So these are tiny amounts. These are $100 extra. How close to the edge are you doing when you need $100 extra? I guess this could be the saving grace for people. If you're just so desperate, you don't have an emergency fund, you're in trouble, you need to get some food or something for your kid, or you need to get that car in the smokes. I don't know. I'm trying to see it from both sides, everyone. Is this predatory, or is this providing the market providing a need for just a group of people that need it? Okay, that's the thing. I don't want to be paternalistic and make judgment calls on people who are struggling and who need this to get by. Hopefully, you don't want this to become a habit. I mean, if you need $100, you need $200. Back in the day, you'd sell something if you really needed something, if you were really down for cash. I remember when we were going through hard times, I sold everything I could that wasn't nailed down. One really good thing with doing that is you learn all this shit that you buy is worthless. All these gimmicks and toys and things that you pay $1,000 for, you try and sell it on the second-hand market, you won't get very much for it. And in some ways, it's humbling and good, and you've got to do it. But you're not going to get that anymore with this, are you? You're still going to go out to IKEA, buy your stupid crap that's overpriced, and not realize what it's actually worth. So, in some ways, there's a lesson, a life lesson that people don't learn. Or maybe I'm just old-fashioned. But consumer advocates have called for better financial regulation for services such as Beforepay to protect vulnerable customers. Now, I've been talking to, the school that we're going to, we teach our children through a distance education school, and we do a lot of the school at home. They've got workshops and sports carnivals and things. They've done a complete change. It feels like we've changed schools entirely. They've changed their entire curriculum. And one thing that's quite frustrating is they've changed their approach. Rather than them assessing that the work you're doing aligns with the curriculum, they're just being quite prescriptive, which is frustrating. But one thing we've noticed is just how much padding and bullshit and busy work is in this Australian curriculum. And I will often say we need to educate people on financial literacy, but I can't see it fitting in. Where we're going to stick it in the schoolwork. It's not going to happen. There's too much in there already. There needs to be a public campaign there. It needs to be cool to be financially literate. Not just us yabbering about it on YouTube. Like Instagram movie stars or, I don't know, pretty girls need to be talking about it in their chick magazines. Do they still have those? You know what I mean. How can we do it? And is Bitcoin and crypto, is that helping or not? Wage advance products are becoming more prevalent and are causing harm for some people, Financial Counselling Australia said in a December report. Although distinct from buy now, pay later, they use the same gap in the law to offer products without safe lending practices. However, Mr. Twist defended the company's lending practices, saying that there is no rollover of debt, nor does it charge late fees or interest rates. Then how do they make money? Instead, customers are required to pay back the initial loan plus a flat fixed 5% on top of that, which does not increase. The maximum amount that can be accessed is $1,000. Okay, so they must have very low costs to run this. 5%. I mean, this is a service that the market is providing. Guys, this is better than credit cards. What other ways do people have to get access to short, quick money if you're in a desperate situation? I would rather people use this than go to a loan shark. Wouldn't you? Well, no, frankly, I would rather people sell the shit they have that they don't need, get rid of the TV, sell the mobile phone and downgrade to a $15 phone before you go to this. But do you think that... Is that really old-fashioned, guys? Will that even happen anymore? Am I too old? Let me know if I've finally done it and evolved to boomer form. So investors dumping Beforepay shares reflect difficulties in other parts of the pay later industry, including Afterpay and Zipco. Last year, buy now, pay later providers revealed millions in losses and also took a beating on the stock market when shares plunged on average 80%. Afterpay reported a $156.3 million loss for the last financial year, which is up by almost 700% compared to the last year. Rival buy now, pay later service Zip also reported a $652 million loss, a whopping 3,000% increase on last year when it announced a $20 million deficit. Okay, so these companies aren't making any profit. Are they going to be able to? Are they just trying to bide their time until they go big in America, guys? I mean, I like this. This, up to $1,000, 5%. I mean, if you annualize that rate, that's insane. Okay, if you annualize it, it is insanely high. Because we're talking 15 days, 2 weeks. But still, that, I think in regards to it not snowballing, could be better than a credit card for some people. My approach is sell your shit, but how can we monetize that, guys? How can we turn that into a business? Let's put our thinking caps on. How can we make the sell your shit card or IPO, you know? I guess maybe, I mean, you've got all these online platforms, Facebook and everywhere that does it now too. Maybe that has to be a marketing campaign for them. So let's check at some of the stats from Beforepay. This is from SelfWealth, the brokerage I use for my Australian trading. If you sign up using the link down below, we each get 5 free share trades, and that's $50 worth of free trades. They do expire in a month, but I make sure to use them all, particularly for my pocket money investing. So thank you to everyone who's signed up. It's I think I've done 100 trades now with it, just buying. I can't be bothered selling. And it saved me a lot of money over the last couple of years, so thank you. And it's cheap and chess sponsored. That's why I'm a fan of it. So, and hashtag not sponsored. So here we have it. They're sitting at, $2.14. As I just captured this morning, we can see there's no data here. Here the shares on trade, or on issue, 31 million, 0.6. Now, who's ownership of it? The top 1% of the community on SelfWealth. Okay, that's just SelfWealth. It's right. There's hardly anything here. The people are buying because of good earnings potential. So here's the question: is now the time to get in? To get in if it actually makes it big in the US. That's what you're betting on, guys. They will grow in the US and people will start using this thing. I've seen all the advertisements. I'm not the target demo. Okay? I'm a 40-year-old middle-aged man with 6 kids living in the suburbs, you know. If there was some Bunnings deal rate I could get, maybe. I don't know. I see this when I went shopping the other day and I see Afterpay everywhere. It's just another step. I can't be bothered. You know. So I'm not the target demo. I can see how this can be advantageous for some people, and I can imagine people are going to jump onto this before they sell any of their goods that they have. Or if they don't even have them, they'll depend on this. We can have a look here at the sentiment of it down here. 88% are bullish, 12% are bearish on this community, guys. And the analysis, what do we have here? Yeah, the same thing. You know, no data yet, everyone. No data yet. But let's look at Afterpay. You know, it's similar sectors, and we'll see here. Look at the environmental score is poor with their ESG score. Social score, satisfactory, C-. You have to see, I mean, these businesses are providing a service that the market needs, and the alternative, you know, it may put an unpleasant taste in your mouth, this idea, you know, lending to people on the bottom, struggling, but what alternatives do they have? Okay, my approach to sell your stuff, okay, it only works if you have stuff. What if people are leasing it all and they don't actually own anything they do? I mean, that's even more of a mess. Yeah, I mean, here's the thing. You can really get stuck in a poverty trap, guys. You really can. I mean, it's 100% undervalued. 100% undervalued according to this. There's a revenue, EBITDA, dividends per share is 0, profit 4.431. But yeah, you can see here where it's going. 35 by ownership, 45% are selling for taking profits, and 55% say the stock is undervalued. Now, it all depends on where you got in. So here's the forecast. The low of $40, a mean of 135, and a high of 175. So the majority are bullish, while 32% are bearish. So guys, there's Afterpay. Similar sectors, different model compared to Beforepay. Let's have a talk about this one, guys. Now, I'm a little conflicted here. I can see the market niche that Beforepay is trying to target, and I can see the value that it can add to some people. Now, it's not the job of businesses to encourage financial literacy. I think that's just our job as a community, and to talk to our friends and to teach our children. We shouldn't even expect the school to teach it, because they're not going to be able to. They're too busy filling it full of all this other stuff. So, I don't know, guys. Is it as evil as I instinctively thought? No, not at all. There's an opportunity there. I mean, they've got to, sure, so long as they can, they're going to take steps to minimize their own default rate. They've already cut all the Centrelink people off from using the service. So you can see there they're self-managing their risk. Does it have potential to grow to be the next big thing in the States? Perhaps it does. Yeah, perhaps it does. This could be something that a younger generation would be more comfortable with doing. So what do you think, guys? Is it a buy? Is now the time to jump in? You know, just chuck a little bit in there, see how it goes. You know, put 1,000 in. Just you know, forget about it. Or is it a sector you don't want to be in? Let me know in the comments below, everyone. And thanks for watching. And check out this last video I did about Afterpay on the channel, guys, just for a little bit of perspective. It rocketed to the moon. And hopefully, let us know in the comments, guys, if you did successful on that one, or if you went in this IPO and are going to hold it, you know, diamond hands and everything. Take care, guys. See you next time.